Hey, hi, welcome everyone. I'm Ellen Remmer. I am a senior partner at the Philanthropic Initiative and the champion around Invest for Better, which I'll just tell you a little bit about. I do want to say that it is an exciting time, we all know, in impact investing. The momentum seems to be building. It feels as though it's going to go mainstream. Mm-hmm. But we all know our job isn't done. From just listening to the voices that we heard there and as we talk to our panelists today, that there still is so much more to be done. And I don't know about you, but every week I'm still in a meeting with other people who kind of look at me, like I'm not sure what you're talking about, or just pretty much, that's just good investing and not quite getting it. So a lot more to be done, and I'm excited today that we're talking a lot about the role of women in making sure those things get done. As we prepped for this morning panel, we had this great conference call last week, and Dran and I were talking about the fact that there was one quality that really seemed to characterize all four of these women, which is relentlessness, absolute relentlessness. They'll start as they tell their story, they saw a need or an injustice and they stepped in to fill it. And then all of them, once they got there, they were like, oh no, it's much bigger than this. We now have to do this. And they stepped in and they filled that. And really today, I think they're doing some of the most remarkable work in terms of building new models and the building blocks that we need for our new economy. And I know a lot of you in this room have been doing the same thing, and it's marvelous to come here together. I'm going to turn it over to my questions to them, but I did want to just mention a little bit. You heard my aha story, and so no more to say about that. I just want to tell you briefly a little bit about Invest for Better, although you know what, I think I'll wait till the end for that. I'm going to wait till the end for that. All right, let's move on to our wonderful panel. So what we're going to do is have everybody just introduce themselves by telling a little bit about what they do, but mostly also about either an aha moment or sort of key reason why they're involved in impact investing. You'll be able to connect some of the voices you heard, and a little bit about their current focus. Yep. Then we're going to go into, in the questions, a little deeper into the journeys, what they've encountered, and then what they see ahead. So why don't we start with you, Patience?
Well, how did I get to pick this chair? I have to go first. I didn't pick it, actually. You picked that one. So it is an incredible pleasure to be here. My name is Patience Marime-Ball. And as we're preparing for this panel, I was asked to talk about my aha moment when it comes to impact. I think I was born with impact in my DNA. I was born in Zimbabwe. And as a young girl in Zimbabwe growing up, I knew that there was, better for me and better for those around me. I went on to work for the International Finance Corporation at the World Bank, so mostly focused on emerging markets and frontier markets. And within that, worked on infrastructure investments, financial markets, etc. But the next aha moment for me was in 2008 when Lehman Brothers fell. And everybody kept saying, well, if Lehman Brothers had been Lehman Sisters, I think we heard about a little bit about that in the introductory remarks earlier on in the audio as well, that was also an aha moment for a lot of people. When I heard of Lehman's fall, I was actually in Dubai, and when I came back to the IFC, back to Washington, D.C., I started interrogating how much of IFC's investment book was actually, and at any given time, IFC had about $45 billion in investments around the world. I started trying to figure out how much of that was actually directed at women and girls. And beyond the $3 billion portfolio that was a microfinance portfolio, there really wasn't very much. You could count the number of investments in women-founded companies or women-led companies or women-focused companies around the world. I decided I was going to change the institution and went on to do that. Today, a program that I started called the Banking on Women program at the IFC is more than a $4 billion program. We issued the first ever gender bonds on the Uridashi market in 2013 and did a global debt fund, the first ever with Goldman Sachs, which is now a $1.45 billion debt fund. In 2014, I decided that I wanted to invest in women for my own account and joined Golden Seeds as an angel investor. And I don't know if the Golden Seeds members in the room, but they tend to be. This is New York after all, hello. And then I was asked by the team there to join them as a member of the GP team for their venture fund. We went around trying to raise money for a $100 million fund. And one of the things we realized was that institutional investors really define women in one of three ways, and those buckets have to be ticked if they're going to give you money. At least that was the case in 2016, 2017. They kept asking us, are you investing in microcredit? Are you going to invest in microcredit or rural women, rural finance, or cook stoves? Because for them, that was the realm of possibility for women, and that frustrated me a great deal. It actually made me decide that I was going to do the next thing, which is what I'm focused on now. I founded and launched in 2018 the Women of the World Endowment, and my view is until women are at the center of capital, until we are inside the rooms of institutional pools of capital, when they retire to Nantucket or wherever it is that they go to decide about their investment strategies, we need to be in the room as an institution pool of capital ourselves, engaging with them and facilitating their evolution to a place where women are more than cook stoves, microcredit, which are all fantastic, by the way, and cook stoves, but we are more than that. And so my endowment is focused on creating a big pool of capital that will be invested across the spectrum, all the way from early stage to public markets, and with the income generated from that, on-granted to women empowerment organizations that are delivering impact on the ground in all kinds of different places around the world. And then the last part, which is the most exciting part, is that we just want to be part of a movement to catalyze a big amount of investment and big scale into gender lens investing. So that's me.
Fantastic.
Thanks, Patience. Lisa Hammann, hello, everyone. I think I'll share three things. One is I'm an operator, an executive operator. I spent my career at Genentech, and to me, the ability to do good and do well has just basically been my entire life. When we were making decisions at Genentech that were thorny and ambiguous and involved millions of dollars, most often someone in the room said, what's best for patients? Because whatever is best for patients is ultimately going to be good for
this
our
patients
business.
and other patients.
Best for patients. Right, exactly.
I'm all for that. What's
Had I known, oh my God, the millions of dollars we could have given you. It was just my whole career, right? Very hard decisions loaded with risk. But if it's good for patients, it's going to be good for our company. When I moved into the reproductive health space, however, I was surprised that that didn't seem to be the case. Most capital that is basically invested in reproductive health is philanthropic. It's grant-based. And early in my time in this particular area, I encountered a company that's trying to bring the birth control pill over the counter. And they couldn't get funding because traditional biotech venture did not think it was, for lack of a better phrase, like sexy enough. Right? There's a whole conversation about that. But, and it occurred to me, wow, all the folks I've been hanging out with in oncology and immunology and respiratory and neurology, all these other therapeutic areas that had tons of venture dollars flowing in, contraception did not. The NIH invested $6 billion in contraception in 2017. They invested $6 billion in oncology, $30 million in contraception. 45% of pregnancies in the US are unintended. So, there's work to be done there. So as a result of this kind of discovery that there's an underfunding in the space and it's underfunded on the venture side, we've created a firm initially called the Reproductive Health Investors Alliance. It's now called RIA Ventures, and we are specifically focused on early stage venture investing for reproductive health in the United States. And you'll hear me talk a little bit more about that today, but thank you so much for having me here today.
Thank you, Lisa.
I was wondering what RIA stood for.
Reproductive Health Investors Alliance.
All becomes clear.
Don't forget it.
So I'm Amanda Bangasser, and I'm Managing Director at Treehouse Investments. We are specifically and explicitly focused on climate, but we do look at everything through a gender lens. We were funded by a remarkable woman, and we feel like it's fundamental. It's been interesting in the energy space because there aren't that many women represented, except in the cook stoves. It's kind of not a gender play. My background is I'm a civil engineer by training. I did sewage treatment, which I won't talk about.
Talk about that later.
Although I love it, and I could. So if you want to, let me know. But and I also never really had a kind of impact. Was always what I wanted to do. I went into engineering because I wanted to make the world a better place. Over time, I came to see that finance had a big part in that. But I did have, and I realized after our call, I did have kind of a gender aha moment. When I was working as an engineer, and I was the only woman on the team, but I had a great team, great supportive men, always very, very enthusiastic. I never felt like I was sidelined or not taken seriously. And we used to have conversations about random things all the time, and one time it came up, and I was like, well, teams are better when they have women on them. It's important to have women on them. And all of the guys in my team, and we sort of sat with our backs together, so around an open plan office, they all looked at me and kind of like deer in the headlight. These are nice guys. These are nice, liberal, open-minded guys. They're not going to tell me. I mean, it was like I had asked them if I looked fat in these pants. They did that same kind of and they all turned around and they went back to, they literally just couldn't touch that question. And I don't like being wrong, so I was determined to find out how I was right. And the more I thought about it, the more I think it is critical. It is, if it's only one group of people whose experience of life, one uniform group of people whose experience of life becomes the decision-making for all things, and engineering affects all kinds of things, from decisions about highways and decisions about schools and decisions about wastewater treatment. If you don't know what your wife is using to clean the dishes and it's going down the drain, you're not going to be as effective as at cleaning up the sewage. So I'm just more and more convinced, and I get more radical as I go. So that was my aha moment in why women should be in decision-making across the board. And all people should be represented. But women, we're 50% of the population, and we're not there.
Exactly. Good morning, everyone. I'm Ekpoudom, partner at Gingerbread Capital. And the aha moment, I think it just extends when I, too, am an immigrant I was born in Nigeria, and I think it extends back into my parents' generation in that both sets of parents not my parents, but our grandparents, were polygamous. So dad's side, 25 wives, mom's side, 13. So I have lots of relatives. lots of relatives.
A country
so we're Catholic now. So one wife, one husband. That's fine. But back in that generation, my grandfathers, one of the things they did that was defining was that they sent both their sons and daughters to school. And my mom and dad came to the US in the 60s to go to college. So, my dad got his PhD, my mom got her master's, and education was the first point of impact that catapulted our family and a lot of immigrant stories. That is that first point of impact. When you get to the next point, my parents were very much like, when I was like, oh, I want to go maybe study fashion or something, they were like, we didn't come to America for that. That is not what you're doing. So off to Princeton I went to become a doctor, which I did not become, but the next best thing was finance and Wall Street. So I ended up at Goldman Sachs, and at that point, I was there 2003, 2008, in between the two downturns, and I was on the trading desk, credit trading desk, and at that point, we were 5 women, and I think we were the most women traders on Wall Street at that time. Wasn't that long ago, and I don't know if there's still that many at this point at a single desk. And it was interesting to look around and see so many women relatively at that point, but then you looked up and it got less and less and less. And I was sitting in a seat where everybody wanted to be, and when I chose to leave, my brother was like, who leaves this job? And I was like, it's better to be in a seat that you really want to be in than just to sit there because it looks good on paper or it's a job somebody else wants. I was like, let somebody else have it. At the same time, I started reading these articles that were like, oh, women don't want to be CEOs. They don't want these kind of high pressure roles, blah, blah, blah. I was like, those are not the women I went to Princeton with, were sitting on this desk with, ultimately went to business school with and beyond. And I got tired of reading that. I wanted to change the narrative. And when I thought about where I wanted to spend my time, I wanted to change that discussion. And when everybody looks, they're like, oh, women will get parity in 100 years. I'm not trying to wait around. I won't be around 100 years to have that kind of impact. So I left, started my own advisory firm, which was in working with women entrepreneurs and investors. Had I been had it been a guy leaving Goldman, I probably would have gone, raised a fund, and just started going. But no woman ever has raised just a fund standalone without what's your track record? What's all of these kind of things where men have been able to raise with no track record. And so I went and learned the ecosystem. And along the way, I partnered up with also a former Goldman colleague, Linnea Roberts, who was the co-head of tech investment banking at the firm. And her story was that she spent 28 years, ex-Lehman as well, and she was the co-head of tech banking before she retired. And she said in her 28 years, she had never made a private investment. And that's not for lack of capital. And she goes, her aha moment of not writing a check, even though she could, and my aha moment of wanting to drive that impact and show that women wanted to be building these kind of big companies kind of aligned. And so we at Gingerbread, we focus on backing high growth female-founded companies in the private sector, early stage, Series A and beyond, where we see a cliff of women that are in the writing of the check seat, as well as the capital going towards female founders. And it's been fantastic. I've been there a year and a half now. The portfolio has about 50 companies in it, ranging anywhere from consumer companies to enterprise and fintech.
Excellent. Thank you. You can see, relentless people. So I wanted to ask a couple of you, but everybody can chime in, a bit more, to go a little deeper on some of the obstacles that you've faced as you've been trying to fill this need and trying to shape this new economy and fill the needs that you've seen. So I'll start with you, Lisa. What are 1 or 2 obstacles that you want to highlight and how you dealt with those?
Sure. So a couple of quick ones, and this is specific to reproductive health. So contraception, maternal health, sexually transmitted infection. First thing is people don't want to talk about sperm. I say cervical mucus about once a week, and it grosses people out. And that's hard, because it's not gross. Like, it's our bodies. And so, to a certain extent, there's an opportunity to desensitize the universe around reproductive health itself, and particularly how women's bodies work, and that's something that we strive for. And the way we handle that is just complete, unabashed commentary, because it's science, just like any other condition or anything else that impacts our bodies. I think the other thing that we see that we have found challenging is when we first went out to think about investing, what we realized was it's also hard for the community to even see what's possible. So when we come out and say, we're thinking about new forms of contraception, people say, oh, you mean like an implant in a different place? And we say, no, we're talking about like non-hormonal, on-demand, female-controlled contraception. And people are like, oh, but what is that? And we say, exactly. So showing the possibility when we've been so entrenched in 50-year-old technology has been a challenge. So the way that we have dealt with that is actually we did not initially raise a fund. We are out doing that now. But for the last year, we've used a special purpose vehicle where we've gone out on a deal-by-deal basis so we can come back and actually show the company and the science to possible investors. Like, look, this company has a technology that could reduce the rate of cesarean sections. And here's how. Is it of interest? This is a company that could conceivably reduce preterm birth rates. Do you like this? And what it's allowed us to do is depressurize the question of just blind financing and help educate the market on the actual specifics of innovation that are possible in the space.
Get real.
Fantastic.
Ida, you certainly talked about the challenges of being a woman raising money for the first time, but I want to talk a little bit more about how you overcame that and then any other obstacles.
Well, I mean, I think when I started and I said I'm going to focus on women entrepreneurs and investors, one of the first two things was, oh, are you doing a nonprofit? I was like, I'm an ex-trader at Goldman Sachs. I believe in capitalism too. I think you can do both. And then the second thing that I got was like, oh, isn't that a niche market? And I was like, we're 51% of the population in the US alone and control 8 trillion plus in investable assets. If that's niche, I'll take that trade all day long. So those are the kinds of things of when you say, I'm focusing on women, you get either nonprofit or it's a small market, isn't it? And I'm like, how many either hedge funds or venture capital firms have just all male partners? Nobody says, there's a lot of all-male firms out there. Like, do we think that the market's saturated? But when you go and say you're going to invest in a venture capital firm that's backed by women, and you hear, oh, there's Golden Seeds, oh, there's Plum Alley, oh, that market's getting pretty crowded, right? I was like, you can name 5 or 10. It's really crazy how people immediately, it's just like, oh, I've heard a few of them. Like, it must be saturated now. So those are the kinds of things that that you really have to overcome. And you hear it from men and women, but then when you start seeing somebody like Katrina Lake, IPO with her child on her hip, but she only raised about 46 million before she took her company public for over $1 billion. That goes directly to the difficulty it was in raising capital, but then also how much more efficient she was with the capital she had to have. Absolutely. And that's some of the things that the data is showing. Women are getting less capital, but they're doing more with the less that they have, so that ultimately when they have exits, they have much better exits because they've been less leveraged and they really did a lot more, whether with debt or equity. Mm-hmm. So encountering those two things are a couple of the big ones. I luckily, on the other hand, ended up in a situation where I didn't have to go out and raise a fund because Gingerbread Capital is carved completely out of George and Linnea Roberts' family office. So that's one of the things that we're seeing that high net worth individuals and families are able to do and starting to do as you see the shift in generational wealth. So Linnea, as she said, she was like, she hadn't written a check and she goes, I can do something about that. And so from her standpoint, they decided that they wanted to carve out this money, and it's all directed towards female-founded companies, and as well, we do investments as LPs in funds that are backed by women GPs.
Excellent. And you're both, you're giving case examples, too, that others can follow.
Exactly,
Yeah.
exactly. And others are following, and you'll continue to see more, especially with ultra-high net worth families, where 50-50 of the shift of capital is going to women in the next generation, and they're starting to do and deploy their capital differently.
Excellent. Great. Patience, maybe you can talk, you talked a bit about your journey, but maybe go a little bit deeper in terms of how your goals and thinking have evolved over this time.
Yeah. So as I indicated, I was born in a place where, doing impact was a natural thing. But I think when it comes to the female market specifically, first I thought an institution cannot be moved. You cannot, and really in the early stages of my attempt to shift investment at IFC, going back to challenges, I would get, so patients, what's next? Are you going to do LGBTQ, whatever, finance next? And my answer was always that if there's a need, why not? And there was definitely a need that I saw for women in the women's space. And what I know and what we all know is that if we're going to solve problems for humanity, and if we assume that only 1% of folks in this world are incredibly smart, we have to also assume that at least 50% or 51% of that is the female brain, right? And when humanity and capital markets only wants to focus on the 50% that's the male brain, I think we're shortchanging ourselves. And I think, for me, I know that women are just as smart and just as driven, and they're capital efficient and all of those wonderful things. But what we need to do is to figure out how to actually drive capital in a way that drives impact as well. So to give you an example, we just did a prototyping workshop hosted by UN Women focused on public markets products that are gender lens investing products. And for our endowment, the question that we're asking is, for every asset class, what's happening in that space that has been traditional? Because if we're building an endowment from scratch, we have an opportunity to build a house that's brand new, right? If part of what we're trying to figure out is, since we get to build this house from scratch, what does us allocation look like? What do the products look like? What if we could ask the question, how about matching the right kind of capital to the right kind of challenge at the right time? What about if we could do that? And what about if we could actually bend the arc of gender parity to a place where it actually could be real in these 5 areas? So we've picked 5 areas to focus on. And sometimes we get the question, you're focusing on women in peace and security. How is that investable? It actually is. If you start thinking about, you can start all the way from do no harm, so I don't want to invest in anything that is guns and whatever, all the way to defining peace and security in the 21st century way, which is privacy, data privacy, cybersecurity issues, which affect women and not sort of underserved communities more than it affects anybody else. Then you recognize there is an entire universe of investable assets there. So that's the work that we're doing. We're interrogating what are the things that need to be done differently. What is the type of asset allocation that you can do differently? How can you leverage capital differently? But all the time thinking about what is the impact that you're driving for. So we just did this prototyping workshop at UN Women where we brought together data aggregators, index developers, product developers, asset owners and asset managers, all the way from BlackRock to asset owners like Ruth Shaber, who's a champion and a patron of a number of folks on stage. And we asked that question, how are you working together to find the data that you need to create deeper indices that actually that are broader and extended in their criteria beyond just women in leadership? Because that's wonderful, but we also want to make sure that when women are in the workplace is one that is comfortable and secure for them. We want to make sure that their health care needs, including reproductive rights needs, are being taken care of. We want to make sure we could do a government scoring, we did a government scoring exercise where we said, well, what if we could score government debt and begin to punish the governments that don't do well by women and girls in their countries and reward those that are doing well? If you cut off the score at 85%, the US would not be part of that basket of government debt, partly because the US does really badly when it comes to women in their reproductive years, and then also when it comes to pay gap, which manifests itself later on in the pension that women have when they retire. So these are the questions that we're interrogating at the endowment and saying to ourselves, we get this once-in-a-lifetime opportunity to take two things that are happening, right? This behavioral change that we're witnessing, where the world wants something better and more impactful for women and girls. But we also have this new investing paradigm, new way of leveraging capital, which is called impact. What if women could actually be at the center of that and define what impact investing looks like for us and the girls who are our daughters and sisters?
It's wonderful. And just such an integrated framework. That's really exciting. Yeah, good. We'll look forward to having that spread out through society. And Amanda, tell us more about your evolution and of your goals. And
It's interesting. I'm really triggered by a lot of what you said, Patience, in terms of how we get these different angles to work together. Our focus is climate, and it's evolved a little bit over time. We've always been interested in climate. We started out we started out with a company that was developing wind projects in Puerto Rico because it made sense on paper. The cost of electricity is really high, and it's really dirty, and it's all imported fuels, and it's contributing to asthma, and it's all, so it made sense. Put in wind turbines, generate clean electricity. There was a great policy in place to buy the electricity. Turns out there were other regulatory things that were able to very effectively block that, and we had to look elsewhere. And when we set up Treehouse Investments in 2013, we explicitly, because we had set up Aspinall Energies to do the wind projects, and that was funded by the family, and we kind of thought that we'd be able to invest the capital into infrastructure more quickly than we were. And so in 2013, we were like, we're not happy with what the private banking side, which is where we were as a family, was doing with our money. All of it was going into fossil fuel stuff that we didn't support, and they were very happy to give us money for a foundation later, but that wasn't driving the kind of change we wanted to see. And so we set up Treehouse to really invest all of the family's capital as impactfully as we could, and looking at climate and looking at gender. And I think then over the past couple of years, as the climate data has got worse and worse, we really went all in for climate. So we are investing in climate, in the energy transition, in mitigation to try and reduce the impact of what's coming and what we see more and more. We were talking this morning about the fires in California. We're seeing it everywhere. It is everywhere. We need to change. We need to change how we're deploying capital. And the people most vulnerable to all of this in terms of the migration that is driving and the violence are women and children, the ones who are left behind to take care of the kids, the ones who can't leave to find a job in some other city as easily, the ones who are responsible for taking care of their elderly parents. And so we have this both a threat and an opportunity, right? Everything is falling apart around us as we speak. And it's terrible and it's terrifying. But at the same time, it connects to a lot of other problems, like the patriarchy and like the imbalance in power and in voice. And it's an opportunity now with this impact investing coming in and the climate situation being what it is to really change, to really make fundamental change in how we do things. And that possibility, while very frightening to me, because I'm afraid, I mean, you do see the momentum, but there's also, for me, that always comes with the fear that it's going to fail and I'm going to be that much more unhappy that I saw the moment when it could have, when we could have done something. So it's terrifying to me, but it's also, it's possible. It's possible. And we have to move, we have to act on both angles, on every angle that we can, but figure out how to pull together. So we love what you're doing.
Love what you're doing.
Why don't we, all of you really are focused on gender lens investing, both in what we invest in and you know, women as investors and asset allocators. Just any other thoughts, and maybe we'll start with you, Ida, in terms of I think Patience actually did lay out a really interesting model of intersectionality going forward. What are you hearing and what are you doing in terms of gender lens? Where do you think this is all going? And you've been investing in women leaders and women-owned companies. How is that playing in the marketplace? Just a little more on the gender lens.
Well, I mean, I think both Lene and I, we just say vote with your dollars, right? If you want to see that change and you are in a position to either allocate capital or you have capital yourself, vote with your dollars. And you're seeing it from major corporates where they're losing younger talent, they're losing women talent. A lot of them are going to start their own companies. So if you're a big company that's trying to retain talent, look to engage your female population, engage your younger population, and people aren't waiting 20 years to stay in one place and hope that they'll get there eventually. So whether it's the companies that we are seeing women out there creating, right now with our philosophy at Gingerbread, we're still relatively early, started in 2016, our portfolio is very broad. Because we want to say, when everybody says that women are only creating these 3 kinds of companies, we say no. Look at our own portfolio. We have women that are in the sciences, women that are in, big technical, analytical types of companies. Women aren't just one thing. Just like nobody is just one thing, but this need to classify and pigeonhole people that just because you're a gender or a race that you must be only doing one kind of thing. That's just not the case. And so from our perspective as investors, we are backing it up with the checks that we write to where we want to see the change. And so that's kind of the advice that I would say. If you're in the ability to do that, vote with your dollars, and that's what's going to make a difference.
Because, with the excitement now about gender lens, it comes a lot of risk too. What are you all seeing in terms of the risks and what we can all do to counter that?
I think it's been really exciting, but I do see the patriarchy fighting back. And I like to tell myself it's in its death throes and we're going to overcome. But we have started, and we mostly just focus on women on the board. And we try to have metrics that we can measure and we can ask all of our investees. And some of the funds in particular are mostly all men, not all. We have some stellar outliers. But in general, we've been asking them now for several years, how many women are on your board? How many women are on the boards of the investee companies? And then we also ask that and track that for our direct investments. And most of them are getting, I would say, progressively more open about it. At first, they were like, we don't, that's none of your business. We don't talk about that. You're a minor investor. Please don't ask these questions. And progressively, even some of the very mainstream ones are getting more responsive. It's like, you got to push, you got to ask them. There are people within those institutions that want to do better. And if they're given some support, if you within the institution can come and say, my investees are asking me, what about this and this and this? How many women are on our board? How many women are on the investment committee? Whatever. Then that helps and you do see momentum. But we also see some that have been very explicit, say, it's none of your business, but out. We have your money now and you're never going to get anything out of us. And that is really frustrating, but it's still there. We're pushing.
I would say that there's a potential, as we saw greenwashing, that there's a potential of pinkwashing, right? And which requires, for those of us who can be thoughtful, for those of us who are in areas of influencing, whether it's institutional capital or whatever capital you can influence, that we demand that there actually be impact, so sort of gender lens impact investing, that you interrogate what the impact is. Because I recall back in 2011 when I did the Banking on Women program, and I was watching what had happened in the green market and how IFC had built that. They started with investing, and then my colleagues started with investing in the green market, and then they did bonds. They issued bonds, and so I said, we're banking on women. We should issue a bond. And I went to the treasurer, and and it was a female treasurer, and Nina Shapiro, and she laughed me out of her office and said, "Patience, go and actually create an actual pipeline, and then when we issue that bond, the proceeds have to be used for investing in women." And I'll never forget that, because we could have just issued a bond because it would have been a gender bond, and as an institution, we had the capacity to do that with all kinds of institutions that IFC worked with. But that discipline and that request of hers, actually it was more of a command than a request of hers, that she said, go and develop the pipeline so that when we go and launch this bond, we're actually telling people what assets you're going to be investing in, I think is really critical. In the same way that you're right. Right now, a lot of what's out in the public markets, 94% of the actual AUM in public markets today is women in leadership, because that's what can be measured. But I think we have to start forcing companies to be transparent about more, because these products have got to be more extended in the impact that they're driving for. So that's the risk that I see, but I think there are enough of us who are being thoughtful about it in rooms like this, and we should demand more.
And I think let's also not be we may be, but women might not just be the saviors of the world by just putting us in there, because there are the Elizabeth Holmes of the world. Let's not just assume that if it's a woman, it will be amazing, because women can be fallible too. So I think it's about having the opportunity to be in the room and to be judged and assessed on the same criteria. Don't, one of the things we see from women fund managers that are raising, even though they have a track record, they're being asked extensively more questions than their male counterparts with less so. So, let us in the room and judge us on the same standards, whether good or bad, but don't weight it one way or the other, just because we want to assume one thing or the other, but look at it with the same kind of perspective when you're doing your diligence.
From a private investing side, I think there's a risk in saying that the reason that people aren't, I'm again specifically thinking about my space, reproductive health, that if only women were making the decisions, we would have great products. And to a certain extent, there may be a gender bias because of the male holding of capital and running the pharmaceutical companies and all those things. But one thing that we do on my team a lot is have a lot of humility about how hard these markets are. And that a rational person choosing between putting a molecule in cancer and putting a molecule in contraception, it's actually a more rational decision. The prices are depressed, it's genericized, clinical trials are hard to run. So one risk, I think, at least in the private side, is to lack humility in the rationalization of the decisions that have been made in the past around these different investment vehicles, and make sure that a little bit to your point, just because we're women doesn't mean we're going to make a company that's going to be great, and understanding how hard these businesses are. And I also think the risk is by saying it's because the men have been making the decisions, at least again in my space, it could antagonize important partners to us. So to say, hey, I get it. You're going to make more money with an Alzheimer's investment than you are in a preterm birth investment. So let's talk about how to change the reimbursement rates for women's health, how to figure out how we get economies of scale, how to put that innovation in a different therapeutic area as well, so that there's more profit to be made in that one investment. I think we all have to work together to make that work, so that it's not just because we're women, but also because it's good for the market itself. And I'm sure that's the case in the public sector as well.
Great. I'm going to turn it over for questions soon, but just to kind of finish up in this conversation about the role of women in the impact investing movement. I've become an evangelist for more women private investors to engage with their assets, because the data shows women just aren't spending as much time investing, and while they're really, really interested in impact investing, there's a big gap between what they're doing and actually what they want to do and what they actually want to do. So this Invest for Better initiative, which there's some other wonderful people here in the room who are part of launching it. Is really all about getting more women asset owners to I guess, wake up. I mean, it's a projection of one's own experience. Wake up like I did to, oh my gosh, there's all this power I have at my fingertips that I have not been using. Philanthropy is great, essential, but there's also the investing side. And it's, you know, we need to step up and do it, and we can support each other in doing it, and we can get, you know, tremendous returns as well as value and psychic value from doing it. So Invest for Better is a campaign, and if anybody's interested, I encourage you to please talk to me at any time. But just a few comments from the rest of you about the role of women in terms of shaping the movement going forward, and then we'll turn to some questions.
Absolutely. I mean, that's kind of where it starts, and you see it in how Linnea chose to start Gingerbread. But I noticed it back in my Goldman years, where the guys in my associate class started making private investments, and none of the women were. And as you know, Linnea's private, all the way up to somebody that's running a division hadn't made one. But like the guys start making these investments really young, and everybody's like, how did they leave to go start their own firm? Because they were out there making other deals, not just had their head down at work, just doing the deal at the job. And that's one of the things that I say to all women in the financial services. And you know, there's the committees within the firms that will actually let you go check the conflicts and let you make those private investments. If you have to determine your level of time, right? You can go do deal by deal, but if you're working a full-time job, you don't necessarily have time to scour out looking for deals. So one of the ways to get exposure is by investing in a fund. So you know, there's lots of funds that if you want to invest in women, there's things like BBG Ventures or Female Founders Fund. There's funds out there that are doing the work that are dedicated in that lens. But if you want to do individual deals, there's great things like 37 Angels where you can teach yourself, and they will teach you the things that you need to look for. So I would say to the women that have the ability and the extra cash, don't leverage your kids' college funds. Again, this is the excess capital on the side, but like just start with a little bit and you'll realize that you have a lot to bring to the table. It's great.
I think that's really powerful. And the story of, is it Linnea?
Linnea, yes.
I mean, that's
yeah, exactly.
So
28 years, not till she actually retired. She said, I spent my whole career doing other people's deals, and I'd never done one.
And this is someone even in the industry, which I think is fascinating. Yeah. Like, I think that's part of...
And she's not alone. Since she started, because she started, a lot of her friends and a lot of her peers have come to her and say, hey, I want to learn more about this, and we started doing these women investing in women things. Events, and they've just been so well attended, and you'd be like, these women are enraptured by cap tables and learning about all these things, and you would just think that we were talking about, the latest hot movie, but no, we're talking about structures, and that's the thing. Once you get in it, you realize this is a fascinating area, and it can be taught.
Yeah.
Yes.
And that we can do it.
Yeah.
It's not some special voodoo thing that.
Yeah.
But I think it is hard. I think that's one of the things that I feel like impact investing is largely driven by women. Not exclusively. There are a lot. I mean, I don't want to diminish the role of the many men who are involved, but it does seem like proportionally, especially within finance, it's. You go to impact things, and there are a lot of women there. And you go to other finance things, and there aren't. And same with energy. Right? There's a lot of women in energy access, not so many in more conventional energy spheres. And I think it all ties back. So I think there's a risk aversion that is not uncommon with many women. And so we kind of hesitate, and we want to learn a little bit more, and we want to, well, I don't actually know enough about this, so I'm not going to put any money in. Whereas guys are like, hey, let's try it, And we should learn from that. We need to take on some of those characteristics, and we need to figure out, what's your safe line, and say, yes, I'm going to put that in, because we need to drive more change and more investment. And because I think still, women are responsible for elder care, for child care. We have, and our own health, which no one else is looking after. No. I think it it means that we bring to investing, as to everything, different perspectives that the guys may not have ever considered because they don't have to worry about those things. And that drives impact. So I think that women are fundamental to impact investing, and if we can just get impact investing more mainstream, then we'll all be carried along in this wonderful way.
Great.
And we need good returns. Let's be clear.
Absolutely.
Nobody's going to do this if it gives you like 1% returns.
We need to be able to retire.
Yeah, so
so
let's.
the point is, at the end of your life, you want to have something to fall
Absolutely.
back on, not feel good about all the money you gave away, but that's nice, but that's not going to.
When I took my money away from my advisor, and I found an impact advisor, I said, and I need market returns on this. I'm going to put some other aside, but because I need to show my spouse, I need to show my family, I need to show everybody that you actually can do it that way.
Yeah, and I think, the whole conversation around, concessionary returns if you invest in women, we need to just kind of get over that narrative, in my opinion. And I think you will see, as you saw, and the portfolios of people with enough vintage in their investing, actually showing that you can make market returns, you can beat benchmark, or investing in women is not anymore, or with a gender lens, is not any more risky than any other sort of impact asset allocation out there. And then, you asked a question about, your original question, which you guys were addressing, like how else can women be at the table in this impact space? I think that, yes, we should come to the table with our money, absolutely. But I think there's so many other ways that women can come to the table. And I think we've got in this hall a lot of young people who are still, working in jobs and don't have that wealth to deploy. I think that you should figure out what your impact passion is and embrace it. It could be, if you are involved in data aggregation, figure out how to influence the system to maybe do some gender disaggregated data, and to be able to influence something else, capture that data that can influence something else. Because institutions can actually be moved. And that's one thing that I learned. And if a girl from Zimbabwe who speaks the way I do and looks the way I do, can influence an institution that has been around, and founded by governments for all of that. And so it was bureaucratic too, founded in 1945. If I could influence them to actually begin to invest their capital differently and invest it into women, I think we all can figure out what is our impact passion and how can we embrace that fully, whether it's money or something else.
I'll just be the final person to answer the question. I agree with all of this, risk tolerance, fluency, sort of belief in yourself. But I have two passions in life. One is reproductive health, and the other is high-quality leadership and healthy organizations. And so I would say it's not just about assets, but it's having high standards about whether these organizations are run well and run ethically and run with integrity, where the women in them and the men are treated fairly, and where people are happy to work there. So I would ask this room and that's not just about being women, but about being good humans. Is the community you're investing in, whether it's a public corporation or a private company or a fund, is it run beautifully? Because our dollars should only go there, in addition to where the outcomes are faced.
Absolutely.
Great, thank you. So questions from the audience?
Hi, I'm Shelley Porgas. I know a lot of you up there. Co-founder and managing partner of the $1 Billion Fund for Women. I'm very excited about this conversation, as I think everybody in the audience is. But one key question I've had, and have had conversations with many fund managers about, is framing what we're doing of investing in women and or companies that benefit women in whatever ways they do as part of an impact investing thesis. Does that reduce the attractiveness, actually, of that investment? We ourselves don't do that. We don't frame ourselves as impact, and I'll talk about that a little bit. when I get to have the stage. But we have heard from numbers of people, and we have companies that are in ag tech, clean tech, so many of the different sectors, women's health, where we all know we're looking for impact. But what our fund managers have told us is that it doesn't add value when they're marketing their funds to frame it that way. So I wonder what your experience is.
Sure, I just had this conversation. So, Ria Ventures is a 501c3, and for the last year, we've been spending time with foundations that are basically paying us, allowing us to survive. So we were having these mission-oriented conversations. Well, I'm from California, I recently sat down with some folks in Silicon Valley to start talking about who we were going to go out to raise the fund, and they both were very clear. Your marketing messages, you've got some really cool companies that they're going to get access to. It is not about the unintended pregnancies. It is not about the maternal mortality rate in the United States. And in fact, for many of these people, it will make them uncomfortable and it will make you seem less serious. So talk about how cool the companies are and that you are uniquely able to get access to seats at that table. So I've had that literally 2 weeks ago, I got that feedback.
Yeah, I mean, I think it's know your audience. If you're sitting across the room from somebody who doesn't care, lead with that. If you're sitting in front of somebody who does care, lead with that. Like, you're gonna have to have multiple messages, because coming in with the same message for every potential investor is not gonna work. And so there are some people who are just like, what are they returning? And that's where leading with data, leading with investments, leading with the other examples is what you're going to do with. But yeah, I would agree. There are absolutely people out there who don't care, and if you lead with that, they'll say, oh, another one, just like they were like, oh, there's like 5 women firms, like, I'm tapped out, it's done. So you really, you really have to just segment it for who you're talking to.
Yeah, I did think that, thank you, thanks for sharing that. I did think that was an important point to make. We all are here because we care and we understand this, that the notion of impact investing is a critical notion, but it isn't necessarily the best way for us to advance the work that we're all trying to do. Thank you.
Know your audience. Good.
Yeah.
Other questions?
Know your audience is a good.
We need you to be at the microphone.
Yeah. Know your audience is it's really it.
Okay. All right, I guess we have only time for one more question. I'm so sorry.
Thank you.
Okay.
Thank you very much for a truly inspiring and illuminating panel. I was struck by your extraordinary relentlessness and your fierce intelligence. But it struck me that really what underlies a lot of that is the fact that all of you have been beneficiaries of extraordinary educations. And in looking at that chart about the 5 areas of women's empowerment, I noticed that education was not mentioned, maybe because it is so fundamental. I'm the head of an all-girls school, the Ethel Walker School in Connecticut. And my question to all of you is, how can we teach our girls about not having that aha moment when they're in their 20s, 30s, or in my case, 60s? How do we teach them so this is a part organically of the way they think?
So because you pointed to the chart, I'm going to take the question first. I was actually having the same conversation with Drian, and our view is under the vertical of women's economic empowerment is where education and climate mitigation sits. I think all of that is part of empowering women economically. As you said, education is the foundation of what got us here, and that's how we think about it. So it is there, it's just not visible. Now, if we're to give you slides that are deeper than that, you'd see that within the women's economic empowerment pillar is education, because you're absolutely right. It is critical.
I will say, my family foundation, one of our sectors is investing in disadvantaged girls, and we've now focused really a lot of it on teaching them financial skills and learning to, potentially go into the financial marketplace going forward. So another way. Yeah. Maybe one more person, and then I'm going to do a closing.
That made me think of my mother, who didn't do any investing at all during most of her life, but and she didn't work while I was growing up, so she went back to college and got her master's degree. And one of the things that she took was like a financial education, she was getting an MBA, and so there's something in there, and they specifically had a course where they chose stocks. I think that there are some games like that where you can choose, and she was the only person in the class. She was already older, going back to school, so she was very self-conscious. She was the only person in the class who asked the guy who was running the class what he recommended. And he recommended, of course it was a man, he recommended that you choose 4. That you don't go crazy choosing all kinds of ones, and that you don't change them all the time, that you leave them there. And they basically, over the course of the term, they looked at the beginning and at the end, and she had done the best, and so she got it was all fictional. They didn't actually put money in, but they just tracked their investment. So there are games like that where you can kind of demystify, I think, and I'm sure.
Yeah, yeah, absolutely. And jokingly, in the Nigerian culture, there's 4 professions: doctor, lawyer, engineer, and then you're a disappointment. So it usually always requires some form of education to get to one of those, and hence you see lots of Nigerians have many degrees. But it's just core of, I think, a lot of immigrant cultures. They know that, that which will set a family, a whole generation apart, will be putting themselves on an educational platform that gives them the access to the opportunities that can then move the needle for, it's usually not just them, but the whole family.
Yeah. So I'd love to close with each of you really concisely, just a couple words, either an invitation or a call to action to this group around women leading the way in impact investing. So we'll start with you, Lisa.
Be confident in your intuition and own instinct.
Okay.
Yeah, you can do it. This depends on us.
Write a check.
Both of those, be confident and write a check.
Good. And I invite you all, if you're interested in starting or joining an Invest for Better circles, similar to your evening. So let's thank these trailblazing women and.